Welcome to S&P's European loan market video overview, detailing leveraged finance trends and activity during November 2010. I'm Suchit Gupta, a member of S&P's Leveraged Commentary and Data Team, a unit of S&P that is not affiliated with S&P Ratings. For the next few minutes, I'll walk you through a review of recent loan and high-yield bond market trends in Europe, before winding up with themes to watch for in December. Before we start, please know that you can follow LCD on Twitter, Facebook, and can join the more than 4,500 contacts in LCD's Leveraged Loan Group on LinkedIn. The links to follow LCD are in the info section on our YouTube channel. Before getting down to business, some fine print. This disclaimer, courtesy parent company Standard & Poor's and McGraw-Hill, covers all the bases. Please read it at your leisure. Volatility entered the markets again towards the end of November, as the focus shifted back to sovereign risk. Yet again the pigs: Portugal, Ireland, Italy, and Spain. A bailout/bail-in for Ireland was announced towards the end of November, but that has done little to mollify the markets. Loans, however, are sending mixed signals. There's been a slight weakening of prices in the secondary market, but at the same time, you've had successful syndication/closes of several deals, including one with a reverse flex. The bond markets are experiencing a fair amount of volatility thanks entirely to the spillover from the sovereign risk contagion. Leveraged loan issuance for November stood at 8.9 billion euros, while high-yield bond issuance stood at 5.3 billion euros. The S&P European Leveraged Loan Index, the LE, had a positive return of 0.54% ex-currency in November, bringing the year-to-date return to 7.14%, again ex-currency. Investors still have cash coming in through repayments, which they have to deploy. Improving fundamentals were seen in default rates, both on the principal amount and in the issuer count, as they eased again. Focusing on the secondary loan market, this chart details the average price of LCD's European Loan Flow Name Composite, a measure of the 18 largest, most liquid loans consisting of 10 issuers since 2002. The secondary loan market was down 67 basis points for the month to close at 96.56. This chart details the monthly return of the LE, a broad measure of European loan market returns that LCD calculates. The European loan market posted a gain of 0.54% for November, down from the 1.42% seen in October. The year-to-date return for the LE stands at 7.14% positive. Now from the secondary, we turn to the primary. This graph details new issue volume for both leveraged loans and high-yield bonds. New issuance for leveraged loans during the month stood at 8.9 billion euros, driven by the 3.5 billion sterling refinancing for Tata Steel and the almost 4 billion refinancing for Wind Telecommunications. High-yield bond issuance stood at 5.3 billion, most of it issued during the beginning of the month. Default rates continue their southwards migration. The default rate by principal amount decreased to 2.88% at the end of October from 5.26% in September, and from 10.54% at the end of December 2009. The default rate by issuer count also decreased to 6.03% at the end of October from 7.69% at the end of September, and from 15.8% at the end of December 2009. In summary, the market is not as confident as it was a month ago as volatility from sovereign risk spills over. That said, there's still a number of auctions happening with strong interest from both sponsors and trade buyers. Even with the volatility, the high-yield market still remains open for business, obviously for the right kind of issuer, as seen from the recent Quicksilver transaction. The loan market is healthy and open for business, fueled by a strong repayment stream. That brings us to the end of our overview. I hope you found it informative. We'll update the analysis each month and plan to have analysis of other specific European market segments going forward. Check out LCD's YouTube page for other video analysis of the leveraged finance market, including US loan market wrap-ups for November and December. The link to the page is in the description for this video. For more information on LCD news or research in Europe, you can contact Anna Cini. You can email her by clicking on the link in the info box. Thanks very much. We'll see you soon, and hope you have good holidays.